Hi, good afternoon. You're watching Closing Trades right here on ET now, and the volatility clearly continues. Today, of course, you've not got a great support coming in from international markets. Asia, for instance, was pretty much a sea of green when we came into trade. Net result, you started off quiet and then we've been just flickering in and out of the green to the red. Right now, holding about 76 odd points up in the green. Having said that, India VIX once again has topped that 22 mark for the first time in about almost 19 months. But we're managing to do pretty okay as of now. What's holding out? It's a bit of a tug of war. You've got some of those large cap banking names which are under pressure. So HDFC Bank, ICICI Bank, IndusInd Bank, they're in the red right now. SBI, though, on the other hand, is actually holding out. Metals are the ones, along with some of the energy plays, they are the ones which are really holding the Nifty up. So be it Coal India, which is up about 4.5%, Hindalco higher by 4.5%, JSW Steel, Tata Steel, that's where all the traction has been today. But on the downside as well, a couple of those broader market plays too are seeing pressure. So City Union Bank, Astral, MCX, Crompton, MFSL, they are the ones which are languishing anywhere between about almost 5.5% on a CUB to MFSL, which is down about almost 3% as we speak right now. But yeah, I guess we're just going to drag ourselves till June 4th, or I don't know.
So, see, Asha, look at the construct. Global Q is strong. Within that, you got rally across the asset classes. Even the metal prices have gone up. Nobody's talking about inflation coming back because soft commodities are down and oil prices are down. So globally, equities are doing okay. Metal prices are up. That's a moment of risk on for global markets. Bear in mind, Nasdaq is at an all-time high. Hello, yes, Nasdaq is at an all-time high. You look at India. I'm not saying that foreign institutional investors have become aggressive buyers, but Thursday's data and Friday's data smacks of more buying and a bit of short covering and less selling in the cash market. So that technical aspect seems to be getting diluted. Third is that concerns which were in and around typically, the election khuspus, that also based on what ground evidence is coming out, markets are getting convinced of continuity. So you put all those factors together, I guess markets are looking decent, breadth is looking okay, and you never know, maybe the last hurrah before the election result, which is still 4th of June, and still good 2 trading weeks are left. The last hurrah in the market is still left. We are not far away from an all-time high, but looking at the speed at which you are moving, both in terms of the market breadth and also in terms of direction, a new high very soon this week, tomorrow, later this week, is something which could be a strong possibility.
Right, absolutely. And Kunal, let's bring on board Kunal as well as Naresh. And we have also Vivek Iyer who's joining us on the show. Kunal, let me come first to you. Today, tomorrow, this week, or only post June 4th, do you think that we'll hit fresh record high levels for markets? Because you're not too far away when you talk about the Nifty record high at least.
In fact, for a change, if the India VIX continues to rise, I believe that the new high could probably occur very soon because a 22% number on the India VIX and a 20-point down on the Nifty in the morning, I think was just an indication that the markets have already adjusted towards a slight increase in the volatility. So I believe now we could be at a zone where a further mild rise in the India VIX could actually act as more of a impetus or a catalyst towards the upside rather than the downside for the indices. So I would now believe that the higher leg of momentum could probably occur once the India VIX maybe crosses 22.5 to 23 levels. And if that happens in the next couple of days, there could be a strong possibility of new high.
Right. Naresh, hi, afternoon. Guess it's all about metals. They are the ones which are shining bright. And in fact, as we speak, the Nifty Metal Index has hit the 10,000 mark for the first time ever. Do you see a sustained momentum or do you think it's time to book profits?
So it's time to keep switching. So earlier it was all about looking at mining companies where we were looking at NMDCs and Vedanta, etc. And now the shift should be towards the steel and producers directly. So that is where the shift is. So from Vedanta, one could get into Hindalco as well as Tata Steel as well as JSW Steel. So my viewers will get further momentum in the steel names and say some bit of a pause in Vedanta, Hindustan Zinc, etc. Or they've overrun in the near term. But the trend is still positive across the metal pack. So just a shift here from one stock to another.
Vivek, what is your sense? Are we in for a last hurrah before the election cycle or before the election results?
Yeah, I think it's at least the sentiment seems to be quite bearish, given that we are close to an all-time high. So I would be surprised if we don't see quite a rally going up to elections.
Okay, let's look at some of the trending names. And Kunal, private banks, they're unable to still, pull through. When is it that you see a meaningful move coming in here?
Very difficult to anticipate. I think I am not sure.
Your claim is that FIIs are going to come back after June 4th. They're sitting on shorts. So,
Yeah,
I mean, where will that money find its way? It has to be private banks,
See, it has to
IT,
be
large
private sector banking
caps.
stocks, but as of now, the markets are just not, into any kind of an indication of buying these private sector banking names. Look at the financial services stocks and the likes of Bajaj Finserv, Finance, etc. These stocks are still trading at sub their long-term moving averages. So there's absolutely no buyers into these stocks, and that's why you're seeing these stocks just into a 0.5% to 1% range. Whereas on the other hand, the PSUs, the defense, etc., they are seeing fourth, fifth consecutive, I think, week or day of price action rally for themselves. Many of them have hit back their new highs in 52-week highs. So I think it could be a matter of time, but I think we'll have to wait and watch.
What's standing out today is actually Balkishan Industries. Big move. And this is a stock where everybody has sort of written it off. Concerns, centered around the fact that Europe will be in problem. Concerns that the US will not make a comeback. So what is Balkishan Industries? It's a tire company. So what is so different about it? Well, they're a specialized tire company, which means that they do for, they make those specialty tires which are used by the agriculture sector, which is used for off-roading, which is used to really move heavy equipment. Unlike normal tire companies who are making for car, two-wheelers, four-wheelers, Balkishan Industries is a specialized tire company. And when there was a downturn in the agrarian economy in US and the agrarian economy in Europe, it went through a tailspin. But now they're making a comeback. So early evidence that US economy is stabilizing, otherwise this sector or this company would have not done well. Naresh, this in a sense has been like an erstwhile favorite. If you look at the 10-year chart of Balkishan Industries, it has created huge amount of wealth. It's only last 1 or 2 years, ever since the Ukraine crisis happened, it has lost some direction.
So for the last 2 years, the stock was relatively sideways, and it has gone through such cycles even before, back in 2018 to 2020, wherein it was sideways and had taken a 40-50% drop. So for now, we've recovered back above the highs of 2021, which were closer to 2,800 odd levels. So after today's move post numbers, it is overbought in the near term, but a retest of 2,700, 2,800 would be a buy zone, because it's a structural breakout in terms of the last 2 years. 2,800 on the upside, 1,800 on the downside was the range. So eventually a longer term target could be much higher. So would wait for a drift down lower after this price action. So closer to 2,700, 2,800 is an entry point and still looks good for the longer term.
Right. Vivek, let me come to you. Let me talk to you about these asset management companies. How are they looking to you right now? Because the fact that a lot of them also link the businesses and the sentiment of most of these AMC companies to what is exactly happening in the markets, but their performance has not been that enthusing, isn't it?
So I think asset management companies, of course, have done extremely well in the last 1 year, but they are also priced to perfection. And beyond. I think if you were to compare them to what asset management companies are priced globally, we are far many standard deviations away from that mean. And I think at some point, I think investors will have to be cautious in these companies in terms of how they are valued.
Well, if you're comparing Vanguard and let's say BlackRock with Indian asset management companies, will that be a fair comparison? Because those companies, they have a lot of ETF. In India, there is no ETF. In ETF, you get very low commission. That's the reason why the pricing and the differential in P multiple is there.
No, very true. But the question is, what future are we moving to, and is that going to be as active as, or is the share of actives going to be as high as it is today? And then, so sure, I can understand there being a premium, even a substantial premium, given the growth runway. But yeah, still, it's probably an avoid for me, given how far up the valuations are going.
There's one data which I want to just look at, and the data which we've been using from last 7-8 days. What was the SIP number in 2014? And what is the SIP number right now? 2014, if one looks at the average monthly SIP, it was not even 2,000 crore a month. Today it stands at 20,000 crore. At 20,000 crore also, the number of active mutual fund accounts in India are actually 6 crores, which is nothing if one looks at what the global averages are and what the Indian saver currently is. That's the data. No, not this one. There's a SIP data which you want to look at. This is the market stack-up data. 1,200 crore has become 20,000 crore. And if you look at the penetration level at 2014, it was less than 3%. In the mutual fund industry, it is still less than 10%. And the number of active demat accounts, number of active mutual fund folios in India are only 5 or 6 crores. And which is frankly nothing, considering that how many food delivery accounts we have, how many Netflix accounts we have. So for me, I think it's a long trend. Naresh, this financial inclusion is a multi-year trend. What would you bet on? Would you bet on AMCs? Would you bet on CDSL? Would you bet on good old NSE, buy it in the private market?
So the bets are across the board. So one could be looking at CDSL and BSE, NSE as the clear-cut bets because they do not have as much cyclicality as compared to what happens with a broking firm or an asset management company. So that's the trade. But the fact is they've already gone up quite a lot over the last 2-3 years. And the SIP data has been a game changer in terms of what happened is when we got the ECS electronic clearing system, that is where SIPs started being sold. And 2020 has been the point where we've started direct equity exposure because now it is easier to open an account, unlike which it used to be 40 signatures. So the view is across the board, one could look at broking companies on a decline, and CDSL and NSE, BSE remain the classical bets for this inclusion.
Looking at some of the other buzzers today, and while SBI, of course, is holding out very well, metals we already addressed. The Adani names are propping up nicely. So Adani Ports is higher by nearly 3%. Adani Enterprise is higher by 3.5% or so. And then the entire energy basket as well is looking pretty okay. BPCL is on a tear, about a 3% uptick coming in there. ONGC as well, higher by about 0.5%. And from amidst the autos, M&M clearly has been showing leadership after its earnings that came by. Another 1% put on in trade today as well. Naresh, revisit the charts for M&M around those 2,500 odd levels on the futures.
So M&M in the near term is overbought. The last breakout for the stock was at 2,000. We've seen a spike to 2,200, then the spike from 2,200 to 2,550 very quickly. Expectation is that it could go sideways, wherein 2,400, which was the gap up a day back, should act as a support. So 2,400 to 2,550, I would expect some bit of a range-bound move. And the leadership in the space shifting to an Ashok Leyland or a Scott Kubota.
All right, so that's a view coming in on the auto space in particular. But on that note, we slip into a break in this edition of Closing Trades. When we come back, we will talk about where the market is headed in the next 45 minutes of trading session.
Is the metals pack that's been shining bright? In fact, the Nifty metal index has hit that 10,000 mark for the first time. So let me take it across to Ashesha, find out what are the factors which are at play and acting as a tailwind for metals, Ashesha.
Well, absolutely. Metal stocks are shining bright today. Nifty metal index is the biggest sectoral gainer today, trading at all-time high levels. It crossed that 10,000 mark for the first time ever. And remember, it is not just today. Nifty metals have been outperforming broader markets for the last many months. So now if we look on a year-to-date basis, Nifty metal index is up 25% at a time when Nifty 50 has just given returns of nearly 4 to 5%. In the last 1 month alone, Nifty metal index is up 12% at a time when Nifty 50 has barely managed to give any returns. This is in the last 1 month. Some of the top gainers on the Nifty metal index in the last 1 month include the likes of Hindustan Zinc. The stock is up 12% today. It is up nearly 75 to 80% in the last 1 month. We have Vedanta and NMDC amongst other top gainers on the Nifty metal index, which are up nearly 20 to 30% in the last 1 month alone. One of the main reasons, of course, is the surge in commodity prices that we have seen globally. So zinc prices, for instance, are up nearly 4% in the last 5 days alone. We have copper prices which are at record high levels. Copper prices have risen 7% in the last 5 days and are up 21% on a year-to-date basis. Nickel prices too are trading at 9-month high levels with a surge of nearly 12% that we have seen in the last 5 days alone. Now, the reason for surge in commodity prices is rising demand, improving economic macro factors from several global economies, the likes of US and China. We also have US and UK that have imposed restrictions on Russian metal, which could create some supply concerns, because of which commodity prices globally are rising. So yes, of course, we have several factors which is leading to the rise in global prices, commodity prices, and that is the reason metal stocks back home in India are on a tear today.
Metal stocks and why they're on a tear today. Thank you so much for that, Ashesha, for outlining that for us. But let's put the spotlight then on one of the stocks that is among the top loser on the Nifty today, Vivek, and that is Nestle India. A lot of news surrounding this particular counter. You also had the shareholders go ahead and reject the royalty. You saw in the special trading session the stock actually surge in trade. In fact, we're seeing the opposite move today. What's your take coming in on Nestle in the consumption pack as a whole, FMCG pack as a whole? Do you think it's a bright spot, or do you think that the valuations are still a little expensive?
I think we've now seen this story so many times, whether it is with the private banks or it's with the underwear companies, where, or it is with FMCG. It's the same story again and again and again, which is if you pay any price, then eventually you're going to pay the price of not having any returns for many, many years, right? So I think broadly, any of these companies that trade at extraordinary valuations are in a void for me. Nestle, of course, a phenomenal company, great return ratios, but everything is already priced in the stock price. And it's not really where I would go and seek extraordinary returns. Of course, I can be wrong, but I feel like the risks outweigh the rewards.
But Vivek, appreciate your time. So glad you could join us. What do we have? We have BEL, which is holding on very smartly. We've got BHEL, which is holding on very smartly. But what's coming to my attention is actually the stock which just fell when there were concerns about balance sheet and about enforcement directorate concerns. And I'm talking about Polycab. It was the hero stock of first half of this year. Then came all the assumptions and all the concerns centered around tax queries. The stock fell. Look at, not today, but if you just look at the YTD chart here, it's got an extraordinary chart. First the rise, then the flat fall, and then the recovery from there. So in fact, Kunal, it is actually much above than what it was before all that ED concerns happened.
Yeah, I think it fell by almost 30%,
Yeah.
5,500
What
to
was the high that time?
5,500 approximately.
And now it is?
Fell down to 3,800 and now it's at 6,700.
Just imagine. I mean, when a good company goes through a temporary distress, and that's the time when you buy that stock, that's the time gains are maximum, and we've seen that happen again and again. Polycab is one example. You bought the distress in this year itself.
Polycab, the entire sector fell. I mean, all your RR cable, all of them were down as much.
I mean, I don't track them that closely, but I would imagine that what happened to Polycab would have had impact on others. But the underlying tailwind in the sector is so strong. Whether it is energy transition, whether it is solar to, whether it is solar to real, or whether it is wind to power, whatever may be the underlying theme, the entire sector is enjoying serious amount of tailwind. Polycab, Havells, RR Cable, that entire space is looking mega excited. But what a move it's been. Havells also, look at it. Wire, complete turnaround. RR Cable, IPO was super hit, came cracking down like Aisha was saying, almost to like 1,200, 1,300, and now it's 1,740.
That's Polycab for you and the cable companies, but there's another case in point where the stock actually fell post-news and then saw a recovery, and after that it's only been falling, and that has to be Paytm, because you saw the stock actually see some sort of a recovery coming in, hopeful that there were some buyers in the market. But that one has only fallen off those levels of 400. Now it's actually recovered to over 350 odd rupees per share mark as well. So that's Paytm for you. That also had a similar impact to what Polycab had on news-based information, but that one has not been able to actually see that sort of a recovery. There you go, 44% downtick in this year alone. Kunal, and any scope of revival in this one by any chance?
It doesn't look like. I think it's still reeling below its key moving averages. So, in a vibrant market, when a stock is unable to break past even about the medium-term moving average, for example, the 50 DMA, that itself is a sign of weakness of trend, which is persisting and continuing for the stock price. So, I think these are the kind of stocks which continue to underperform, even if the market gets into a second zone of the upside. But I believe that it's best to avoid these kind of names rather than having any kind of a contra expectation that these stocks would probably try and come up and cover up the underperformance.
Okay, on that note, Kunal, let's have your closing trades as well.
So I'll go with ABFRL stock, which I've been bullish on earlier. It's confirming a breakout yet again about that 265, 270 plus mark. So looks interesting even from a short-term play now.
Right. Naresh, what about your closing strategies?
So that would be a buy on JSW Steel. The stock has hit a new all-time high today. Broken out about that a 900, 910 mark, which was the resistance for the last 2 weeks, as well as the top end December 23 was around this 900 mark. So looks like a fresh breakout and could see follow-up over the next few sessions.
So those are the closing trades coming in from our experts. But on that note, we slip into a break on this edition of Closing Trades. But optimistic commentary coming in from multiple companies, HAL, RVNL, as well as City Union Bank. All are buzzing on back of the earnings. Listen in to what the management had to say.
Our intention is that to see that this 13% has become the benchmark. Now we should at least at the minimum, we should sustain this 13%. And we are hopeful that with more and more execution of orders coming through in the next few years, the growth rate is likely to pick the momentum, and we are confident that we should be able to reach around 15% in the next 2 to 3 year time frame. What is more important is that this growth rate is going to be sustainable for the next few years, given the current order book position and visibility of orders in the pipeline for the future.
We expect in next financial year, that is 24-25, we should have an order book of around 1 lakh crores, the top line 23,000 crores, bottom line 1600 to 1700 crores. So this is for 24-25. And with the same kind of projection, we can predict for 25-26. We are eyeing for business in the neighboring countries like Bangladesh, Nepal, Sri Lanka, Mauritius. There are large number of projects in African countries. We have been shortlisted in expression of interest in Africa. And 2 projects we have been shortlisted.
Whatever we had in the fourth quarter is a very good indication on how things will improve in the current year. Once we cross a double-digit figure during the course of the year, we will be in a position to give the exact expectations and the forecast for the current financial year. And finally, when things come to ROA, you can clearly see things have crossed 1.5%, which is our long-term average. So the things are back on track.
All right, Kunj Bansal joins us. Half an hour of trade left, 30 minutes actually to be precise, and markets are not looking bad at all. Kunj, how you been? Long time?
All well, the markets are keeping everybody happy despite so many ups and downs and news flows and volatility and global money volatility. Market is able to keep its head up. Nifty large cap indices are close to lifetime high, and so is the interest in the mid and small cap continues. Of course, the volatility keeps coming in between, which it should also, because without that, the broader money doesn't get a time to get into the market, and every correction offers that opportunity.
All right, let's actually take it across to Ansh, who is standing by to talk about what are the stocks that are seeing price volume action in today's trading session. And Ansh, which are the 3 stocks that you're going to talk about today?
Right, so starting with Aditya Birla Fashion, the stock is in focus that it has given a breakout from its resistance of 270 to 275 level, where it was facing strong resistance previous month as well. Also, the stock has touched 1-year high with volume of over 4 times its average trading volume of last 10 sessions. Apart from this, Hindalco will also be in focus, as the stock has actually given a breakout from its key resistance zone of 665, touching record high level with volume of over 2 times its 10 session average. NCC is also in focus, as the stock stock has actually given a breakout from its upward sloping resistance zone with volume of over twice, touching record high level as well. Lastly, HPCL will also be in focus as the stock has actually given a breakout from its 7-session consolidation pattern with volume of over 40%, its average trading volume of last 20 sessions. So keep an eye on the stocks.
A portfolio strategy in the run-up to the budget. Are you buying puts? Are you raising cash, or are you simply fully invested?
Is that question to me?
हाँ जी, एक ही कुंज है शो पर, दूसरा निकुंज है.
No, sorry, I couldn't hear that word, Kunj. Yes, Nikunj is there. Yes. Sure. So, we have repeatedly seen that it's always difficult, in fact, impossible to take a call on the market timing, indices movement, and all. Even if somebody is able to take the call at few times, it's not always that one is able to take a call at the 100% of the times. So, as a result of that, it's always better to have a uh, divided strategy. By that, what I mean is that one, depending on his risk profile, should segregate his investments into two buckets. One is the long-term investment that one will continue to hold uh, and will be able to recover, that will ride with the market. The other is a smaller part of the portfolio, which one can call a trading part of the portfolio. Now, that is where one can decide what to do in terms of event risks like the election result or any other event risks that keep coming in and going in. One shouldn't touch the investment part of the portfolio because, as I said, it will always be difficult to time the market. If one is even able to successfully exit, let's say, at highs or close to highs, when the market falls, a tendency tends to come in that no, the fall will come more, the market will fall more, and as a result, the entry becomes difficult. So investment part shouldn't be touched. Coming back to the trading part of the portfolio, yes, one can look at multiple things. One can simply move into cash, given the fact that markets are at a lifetime high, and despite the volatilities, despite the news flow, despite the volatile global money flows, of course, the support of domestic money flow is still there. Market is it's close to life high, and as a result, the valuations are not really cheap. Valuations are on the expensive side. So that's where one can either simply take a call to move a trading part of the portfolio into cash. That's one. Yes, for all the short-term traders, if they want to adopt the suitable derivative strategies like buying a put, they can do that also. So that, I think, dividing the portfolio into investment and trading and then taking a call will be more sensible approach instead of taking a full portfolio call.
If you, let's say, make a new high in the run-up to the election, then what should one do? Take some chips off the table or stay with the trend? They always say, no, trend is your friend. So if the markets are telling you in the run-up to the election that there is momentum and then there is constructive price action, should one start buying protection, stay in cash, or remain fully invested? Technically, how would you approach this event?
I'll go with fully invested as...
Fully invested?
Absolutely, Nikunj. I think there's no doubts about it because, see, you may have residual cash, maybe 2-5% cash. That depends on the kind of opportunities which the markets are showing, right? In case if they happen to show post the election results. But the way the construct of the market, the setup across the globe, I think we are into a state of calm across the globe rather than, extreme euphoria or any kind of a panic across, various asset classes. So I think in that context, maybe this could be an event which could probably play as a catalyst to the current market trend. In case if there is any kind of a correction, I would believe that should be taken as good buying opportunity. But in case if the market opens with rallies up further, then buying these stocks at maybe another 10-15% higher with an expectation that because then you'll be not left out with too many events. In fact, there could be added uncertainty which could come back into the indices, going into the budget, etc. So I think in that context, staying fully invested over here, riding the trend, and trying to capitalize as much as possible, I think could be a better strategy.
We always say, okay, remember when markets did not like the verdict, it was circuit down. Remember when markets liked the verdict, it was circuit up. But there is one big difference, and that one big difference is that time the size of the market and the size of the market is different. Sensex,
and the positioning also. I mean, there's been so much DII buying. We're 250 points away from the all-time high on the Nifty, which is nothing.
What is the total outflow of FI this year? 1 lakh crore. 1 lakh crore and market is at an all-time high. So 1 lakh crore somebody sold and somebody's bought. That is the kind of absorption power what markets have at a domestic level. B, the level of the market is different. That time you were competing with US, that time you're competing with China, that time you're competing with all other crazy forces in the world in terms of financial market. That's the second part. Third, what many folks don't realize is that in 2009 the election verdict came on a Saturday. Yeah, the election verdict came on a Saturday. And then Monday when markets opened, SGX had already rallied and SGX was not liquid. So you had the counter market which is SGX, the market reaction had to be in proportion with SGX. Nobody got a chance to trade. Everybody loved the election verdict, and then Monday morning when you came back, the SGX was up, so the depth was not there, and that in a sense acted as this real rocket kind of an impact on the market. So the markets were different, approach was different, liquidity was different, trading conditions were different. So I really don't expect whatever may be the verdict. I mean, let's hope that markets like the verdict, but whatever may be the verdict, all this false fear mongering.
It's not going to be a circuit day.
Yeah, that is my view.
In fact, one of the trivia which I remember in 2009 was we had a circuit day on Monday. I think the timing was 9:55. And in fact, so 9:55 the markets opened, and within 1 minute I think it was up circuit. And the next day on the SGX Nifty we were up another 20%. We didn't open 20% on the Indian markets, but I remember it very clearly that day.
Yeah, the market hi alag tha, boss. There's a different market.
What was the Nifty level in 2009?
I think 3,700 or 4,400. Yeah.
It was a very shallow market.
Since 2003, I distinctly remember I was in media that time covering markets, and the Sensex was at about 4,500 or 5,000. We'll have to check the numbers here, and the market did not fall on that day. On the day election verdict came out, the markets did not fall. It was after a comment which came from one of the winning parties. In that case, it was CPIM that time. They made a comment on disinvestment, and the next day, market had traded. And the next day, it went circuit down. That too after 15 minutes of trade. But the depth was so different. I mean, you're talking history here, just to remind our viewers that, boss, I mean, history does not repeat itself in totality. Whatever may be the verdict, I hope markets like the verdict, but I'm not expecting like an earthquake. It is not going to be in financial Armageddon that circuit lag gaya ghar jao. I don't think it's going to happen like this. Kunj, what do you think?
Still not be able to go, I hopes. But
Kunj, what do you think?
Yeah, so you have already, all of you have together discussed the issue threadbare. I will probably not be able to add anything incremental to this except to say that for a short-term trader, of course, he has to keep his stop losses in mind. He has to go with technical patterns and other things. Given the fact that market is, as we have been repeatedly discussing, close to lifetime high, market is building in a lot of expectation. And it might so happen that irrespective of the fact that whatever comes out after the event risk, that is the election result, even if the result is in line with the expectation, there could be some money being taken off the table. Purely because of the fact that, as I said, in anticipation, market is already at a life high. People probably are carrying short-term position into the event in expectation of something which is has been built based on the opinion polls that came out earlier and subsequently news flow and all. So in either case of the event, whether the government formation is in line with broader expectation that is there based on the opinion polls and other news flow, or if it is not in line with that expectation, in either case, there could be money being taken off the table. The fact remains that Indian market, in terms of market capitalization, in terms of liquidity, in terms of participation of global and domestic investors, is now much more deeper than it used to be earlier. And to that extent, the impact may not be sharp either way.
Right. So while we've been talking about the market construct, when you compare it to the previous poll verdicts and all, Aisha, one key data point that's come across is the fact that the total market capitalization of BSE listed stocks has now risen for the first time ever above the $5 trillion mark, and that's on an intraday basis. Apparently, that $1 trillion recovery or the surge has happened in only a period of 6 months.
Beat that. All with the FIS selling, we've still managed to do it. But still in the thick of earnings as well, I know we're completely hung up on what the election verdict is going to be and what the election portfolio should look like. But earnings, and let's take it across to Srishti, find out what to expect from Sun Pharma. Okay, we'll do that in just a bit. But Naresh, just as a trend, what is it that you see for pharma? I mean, a lot of the stocks have already moved up, but anything that's looking interesting for a buy right now?
So first is Aurobindo Pharma, which has broken out into a new all-time high, consolidated well around this 1150, 1180 resistance and has broken out. So that looks promising for a move towards 1300. Second is Sun Pharma. For the last few sessions, it was in a very tight range, say roughly 1540, 1550 was the resistance, has crossed that today. So that looks like a short-term breakout, which could again go back to 1630 levels. So Auro Pharma looks interesting, and next is Sun Pharma.
Looks interesting, and that one has hit a fresh record high level on an intraday basis today, as well as Sun Pharma. But let's get your BTST ideas then. Kunal, what's yours?
So the first one is band DV Slab. After quite some time, the stock is inching towards a breakout, swing breakout about that 4,000 plus mark. So it's suggest a buy with a target of 4,100. Stop loss could be kept at 3,950. And dollar industries is something which has been very strong in terms of a trend over the last 6 months, 1 year or so. Crossing the level of 630, would suggest a buy with a target of 684. Stop loss at 620.
Right. Naresh, what about your BTST trades?
So first to do a buy on JSW Steel, which has broken out into new all-time high. Stop loss at 920, target price of 945. Second is a buy on BPCL, which has given a short-term range breakout. Good volumes today. Stop loss at 640, target price of 660.
Right, okay. Besides the markets, the other thing which has been soaring is temperatures across country and in particular North India. In fact, mercury has once again breached 47 degrees Celsius mark in parts of Delhi already. The IMD has issued a red alert for the next 5 days in the national capital, despite the mandated summer vacation between May 11th and June 30th. The Department of Education has learned that some schools are still operational, and it's not just Delhi. Punjab, Haryana, Chandigarh are also all reeling under a severe heat wave and have had a red alert warning issued for them. In fact, in Punjab, schools have closed with temperatures reaching 45 degrees Celsius already. Nikhil from our network joins in with the latest updates on the same.
Harsh weather conditions are currently being experienced in parts of the capital city. If we talk about the temperature in particular, it has reached to a level of 47.4 degrees Celsius, which is the highest recorded so far for summer season for the year 2024. Back in the year 1998, that means 26 years before, the temperature highest was recorded at about 48.4 degrees Celsius, and it appears like for this summer season it is likely to cross all the previous records. As far as the IMD is concerned, they have already mentioned that the intense heat waves are likely to continue for next few days, and also there is no respite which is expected from the side of the weather for next a week or two. That means similar condition and the scorching heat, this is something which has to be experienced by all the people who are residing in part of the NCR city. The schools in Noida, Ghaziabad, Delhi and Gurugram, they have been asked to remain shut for summer vacation by the state department and the district authorities until further orders. And this is something which is applicable for all the classes, all the boards.
All right, thank you so much for that, Nikhil. And definitely the heat is soaring, no doubt. In Mumbai, the temperatures, yesterday there was a yellow alert, but it just feels like 45, even though it is 37 degrees. But let's take it across to Shrishti, who's here to take us through the earnings, what we should pencil in when it comes to Sun Pharma. They also had to report their numbers. And Shrishti, what should we expect?
So we're expecting a decent trend from Sun Pharma, because though on a sequential basis we are not expecting a significant jump, but on a YY basis there could be a double-digit growth for Sun Pharma, and all eyes will be on the US sales this time around, because for US we're expecting a growth of 16% on a YY basis, and we are expecting the number close to be $500 million, and the push could once again come from the specialty sales portfolio, and the key to watch will be the contribution from the G-Rev limit as well. But apart from that, in the domestic business, we are expecting a growth of 10% on a YY basis, and actually factoring in all of these into the numbers, we are expecting a revenue close to 12,522 crores. The EBITDA is expected at 3,240 crores, while the margins expected at 25.9%. And lastly, onto the profit figure, though on a sequential basis there could be just a flatter sort of a growth, but on a YY basis a 31% jump onto the profit of the company is what we are expecting at 2,602 crores. But apart from the numbers, the key to watch will be the management commentary and the update on remediation of the Halol and the Maholi sites. Other than that, the outlook on their R&D spending as well. And how are they seeing the outlook for the specialty sales, not just in US, but from in the rest of the markets as well? So all of this we will be eyeing on the management commentary, but this time a decent set expected from Sun Pharma. The US sales as well as the margins are key to watch.
Thank you so much for that, Shrishti. Definitely watch out for Sun Pharma numbers. And yes, remember that if you talk about the pharma space, Nuresh is liking Sun Pharma along with Aurobindo Pharma. Kunj, what about you? How is the pharma space looking to you right now? Attractive space. Also, what's exactly happening with select pockets of pharma names, be it Aurobindo Pharma, because a year ago, the stock was hovering around levels that were sub 500 rupees per share. Now it has surpassed 1200 rupees.
So, as a portfolio strategy, obviously in a market which is at a close to lifetime high and which is moving into an event, event risk, if we want to call it that way. It is always advisable to tilt the portfolio towards the defensive sectors and stocks. And pharma obviously comes into the defensive sectors along with the consumer space, let's say mainly the fast moving consumer goods, the consumer durables, non-durables space. Of course, having said that, we have to keep in mind that after a reasonably long, quite a number of 4 5 years plus of underperformance by pharma, it's for the last few months that pharma started performing again, partly because of the continuous inflow, which then on an incremental basis looks for the sectors which are undervalued and which have not participated in the market. So pharma fitted into that. Of course, there was some improvement in the financial numbers of the companies also. So that's the other reason that pharma came into the buying radar of various participants in the market. And that's where we have seen the outperformance. Probably we could continue to see it going forward. In fact, if at all we want, let's link it to the fact that we are running through the heat wave and all other things. So if we go and recall, hardly till about maybe few months ago, consumer durable space of all these companies which are electrical and electronic equipment manufacturers, air conditioner manufacturers, air coolers, refrigerator manufacturers, nobody was looking at that sector. Suddenly that sector kind of gave 30-40% return. So that's the kind of things that might happen. Again, coming back to the event risk, as I said, one has to look at the defensives and also the fact that non-participated fact sectors. So on IT, let's say we are indeed clearly having pressure of performance on the companies in terms of results, in terms of top lines not being growing. But at the same time, sector has corrected significantly, and depending on how things shape up, might see the buying interest coming back.
Which the other thing is, an election strategy. Are you sitting on some amount of cash on the sidelines? Are you fully invested going into the event? What's your strategy?
Yeah, sorry, if the question is to me, I couldn't hear it properly.
Yes, Kunj, to you. Just wondering what the big June 4th event outcome, or rather event strategy is. Are you sitting on some cash on the sides, keeping some powder dry to invest, figure out, which direction the market takes, what the directive is really after the verdict? Or are you going into the event fully invested?
Yeah. So in the face of an event risk, it's always advisable that instead of taking then that an overall call, a call on the whole portfolio, one segregates his portfolio into two buckets. One is the investment bucket. Let's say in the absence of any other factors, I can probably put 70% of the portfolio to be kept in investment bucket, which should be for medium to long term. Because if there is no correction in the market, it will be very difficult to time it and to get an opportunity to get back into the stock. The other bucket, we can call it trading part of the portfolio, which if we have put 70% in investment, that will leave 30% of the portfolio as trading part of the bucket. That is where one can take a call in the event risk. And given the fact that in terms of the valuation, we are as a reasonably matured to, let's say, higher than the average level. In terms of indices, absolute numbers, we are close to the lifetime highs. We are indeed seeing some actions in terms of macroeconomy being kind of some being supportive, some being non-supportive. In terms of non-supportive, inflation still remains a key monitorable. The interest rate reduction, which was expected mainly in the US market, seems to have got pushed back. In India also, we have to watch it. And global market, global inflow support is not there. Of course, domestic inflow support continues to be there. So all these things putting together, the fact that market is at a high, one would probably can be advised to take some money off the table only from the trading part of the portfolio and be in cash as one goes into the event risk and takes a call post the event.
It's always good to have you on the show. We'll let you go on that note. In fact, earlier today we were chatting with Mihir Vora as well from Trust Mutual Fund, and here's what he recommends as an election portfolio strategy.
The current government comes back. The attention then would shift to the cabinet formation, then it would shift to the 100-day agenda. And markets, they always like to hunt for something different. So immediately from that 100-day perspective, where do you think the narrative could be? I mean, what is the new one thing which you think markets are expecting from the current government to come back and do in a new avatar? Modi 3.0.
I think it'll be more of the same. And of course, after that, you'll also start looking towards the budget, but which I think is going to be a non-event in any case. Not much.
Budget is also no event, election is also no event. The event kya hai phir?
India is the event. India is the event. India is the event.
Yeah, you never know.
So I think the growth story continues, and India is one pocket apart from the US, which is growing very well in the world. So I think we should just enjoy it and ride it.
All right, so that's the view coming in from Mihir Vora on elections and markets. And Kunal, let's talk about one pocket that has done exceedingly well over the last 1 year, and that's a huge pocket actually, is the PSU space as a whole, be it the defense space, be it the railways, power, all of them have seen sharp run up. Do you anticipate there is some more steam left in in the defense pack in particular, because you've seen most of them hit fresh record high levels as of today as well?
It's a different ballgame altogether for the PSU stocks, because the indicators and the traditional way in which we view as well as forecast stock prices and the indicator behaviors, that's changed completely for the PSU stocks, not just in the last few days of this price rally, but I think specifically for the last 6 odd months. I think from October, November 2023 odd period, from where the indicators had started to get into an overbought territory. There was a mild correction for the markets and the PSU stocks. But then the second phase of the rallies, and the the trends which have happened post that, I think has gone to a different tangent altogether for many of the PSU names. So very bullish on the entire pack. Very difficult to anticipate in this kind of a scenario that when could the entire PSU pack top out. But I think it's about riding the rally and trying to trail the stop losses and just ensuring that the trend remains intact for these names for some more time.
That note, let's begin winding up for the day. Kunal, Naresh, both of you, we'll let you go on that note. See you again tomorrow morning. And it's over to Vinny for the closing trades.
Absolutely. So we're winding down the day. Off the day's highest point, 22,500 levels is what the Nifty is managing to hold on to. But Nifty Bank, nothing exciting that's happening on that front. Nifty Bank is down 0.3 to 0.4% in trade. So yes, nothing exciting for the Nifty Bank. What managed to do well is today the Nifty Metals, right? That was shining bright in trade. And Nifty Metals, all the names, Hindalco, Tata Steel, JSW Steel, all of them managing to hold on to very, very strong gains. JSW Steel did report their numbers, and it was a strong set of numbers that was reported by the company. Other than that, Adani Ports managed to see very strong gains. Aurobindo Pharma, new highs coming in for Aurobindo Pharma as well. So yes, in the pharma pack, we had Aurobindo Pharma. Let's pull up Sun Pharma. That is buzzing in trade ahead of its numbers that are expected tomorrow. Cipla is also holding on to gains, as well as Sun Pharma seems like gave up those gains. But other than that, we had Biocon, which managed to hold on to some bit of a gain. Let's move on and talk about some of the mid-cap movers in trade. And from the mid and small cap side, we did have RVNL after a strong order book and order win that they had. We saw RVNL buzzing in trade. Balkrishna Industries managing to hold on to very, very strong gains, around an 8 to 9% uptick that we're seeing, and that's what it is closing at for Balkrishna Industries, with a strong gain after a good set of numbers. ABFRL, that's another one that's been buzzing in trade. SJVN holding on to very, very strong gains there. While what didn't do well, Delivery, disappointing set of numbers. What brokerages are saying, they're not too excited with it. They've cut the target price for this. So yes, Delivery is a bit under pressure. Astral 2 under pressure after its numbers. And other than that, we had Cummins India, CG Power, Kalyan Jewellers, which are seeing a bit of a pressure today in trade. Apart from that, sectors which are managing to hold on to gains today is the Nifty Energy. as well as the PSU banks, which managed to hold on to gains of more than 1%, while a Nifty bank, like I was saying, under pressure, and FMCG bank under pressure. That's how we are winding down the day today. What we are seeing is the Nifty of the day's highest point, mid cap managing to hold on to decent gains, while small cap closing in the red, and that's the day for Tuesday.